Good morning, everyone. It's Stephen Whiteside here from theuptrend.com with your morning market outlook for Tuesday, May 26, 2026. Well, welcome back to all those people who were off yesterday. The Canadian markets were open. Yesterday, we saw futures trade higher throughout the day. They were higher over the weekend. And so here we are coming into Tuesday's trading action. The Canadian market had these numbers yesterday, and the Canadian market traded higher. We are moving higher on the back of falling crude oil prices, which were down lower over the weekend. But here we are, we're down $4.06 coming into Monday's trading action. The price of gold is down $9. That's not enough to set off any alarm bells. A couple of charts before we get to the what happened yesterday. And I'm not going to spend much time on the U.S. market today, so just stick around for a few minutes. And then if you're just watching the U.S. market, you can sign off pretty quickly. We've talked about consumer sentiment. Last month, it made a new all-time low since they started collecting these numbers. Again, we're down this month, making a new all-time low for consumer sentiment. Typically, when we trend in this direction, this is when a recession is about to start. Typically, when the consumer is weak, consumer staple stocks will outperform consumer discretionary stocks. That party has not started yet. It will start at some point. It's just the market is not focused on anything to do with the economy at the moment. It's all about chips and AI and those big cap tech stocks. That's all the market cares about at this particular moment. Now, here's something interesting, and we've mentioned this many times over the past 6 months at least, the fact that Warren Buffett has been loading up on cash and has not been really chasing the market up at these levels. Of course, they talk about the fact that the market is very overvalued right now, and it has been overvalued for some time. Not all the individual stocks, of course, but just the market itself, which is being propelled higher by the AI revolution, which Warren Buffett's Berkshire Hathaway is not really participating in at the moment. And so what we're seeing here is that Berkshire Hathaway is underperforming the S&P 500 at levels that we haven't seen since back in when COVID started and back before the financial crisis. And so some people are looking at that as a warning sign. It does take a while before things kick back in, but you can see the fact that they have not been participating in the last part of this rally has left them a little wounded at the moment. If we look at this weekly chart of Berkshire Hathaway, you can see when it peaked back here, and the value actually peaked during the time the stock market was selling off because of Trump's tariff announcements. And so the S&P 500 has been moving up ever since, while Berkshire Hathaway has been stalled and has been in a tight trading range for almost a year now. And so we're looking for a breakout or a breakdown to tell us which way the market's going to go next. And we don't have any such movement coming into Tuesday's trading action. Now, looking at the VIX is on a sell signal right now, so that's supportive for higher stock prices. We really need to see the VIX, jump through some hoops before the market's really going to start to react on the negative side. And so trading above all the major moving averages will certainly get some people's attention. I'm looking for a breakout of the top of the flypaper channel, which would take us out above the recent high from back here in April. So 2188, I'm looking for a breakout above that before I think the market's going to turn bearish. And we're certainly nowhere near that coming into Tuesday's trading action. Now, moving on to some of the major index ETFs, starting off in New York, we had the S&P 500, the NASDAQ, and the semiconductors all move higher on Friday. Anytime you're coming into a 3-day long weekend, it usually has a bullish bias to it. It's very rare that the market sells off going into a 3-day long weekend. So here we are. Now, if you're only following the U.S. market, the rest of the presentation is going to focus on the Canadian market, which was open yesterday. So we had a new high for the iShares for the TSX 60. Our next target is 5166, which is currently the top of our projected trading range. Above that, if you look at the weekly chart, you can see 5313 is our next target. Looking at the Vanguard Canada ETF, you can see our next target to the upside is 7188. Now, what happened yesterday? Well, it was materials were the big winners, followed by Infotech. The big loser on the day, and the only loser on the day, was the energy sector. So there's materials moving up into the channel. So a close above yesterday's high on Tuesday would give us a buy signal. You can see there's a nice open gap to fill there. That is also true for the gold sector, which closed in the middle of the channel yesterday. So potentials for buy signals, but we do see gold trading lower in the pre-market. Looking at the tech sector, it continued to move higher. So we saw some fall through to the upside from Friday's trading action. And then what didn't work? Well, it was the energy sector, which was down and gave us a sell signal as of Monday's close. Let's finish off this morning's presentation taking a look at the TSX Most Actives, starting with Manulife, which had an inside day on Monday. No change there. We do have sell signals across the board in the energy sector, starting off with Whitecap. Then we've got BlackBerry making a new high on Monday. It's trying to break away from 1094. 1250 is our next target for BlackBerry. We've got Brookfield having an inside day on Monday. Brookfield's been treading water for a while here. We're stuck in a range. We're trying to break out above 68.75. As you can see, we've made a series of higher lows recently, and now we're looking to see if we can break out and make higher highs. We're stuck in the flypaper channel right now. That, of course, is a neutral zone, and we're looking to see if we break out or break down from the flypaper channel. Looking at Hive Digital, we made a new high yesterday. We're stuck here at 586, looking for a move up to 625. We got as high as 591 yesterday, so we haven't tested the $6 level of resistance just yet. There's Baytech back on a sell signal as of Monday's close. We've got Cenovus back on a sell signal as of Monday's close. Canadian Natural Resources still waiting for a close on Tuesday below $64.76. There's a new high for Keel. Next target to the upside is 781. Then we've got TELUS with an inside day yesterday, but it did close above the upper channel line. So TELUS has been an ugly looking stock for a while, trading below all the major moving averages, using the 50-day as resistance at the moment. It's been struggling under the flypaper channel for some time now. Compare that to some of the other stocks in this sector. You can see Bell and Rogers both stuck in the flypaper channel right now. The only stock in this sector that's been working has been Quebecor, and as you can see, it's been using the flypaper channel as support, whereas TELUS has been using the flypaper channel as resistance. Okay, folks, that is all for this morning's presentation. So far, it looks like the market wants to open higher on Tuesday morning. Have a great day. Next time you'll hear my voice is on Wednesday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theyuptrend.com.